Trading. Hope you are well. Today is May 25, 2023, and I'll be analyzing the ASX200, what's happening with our market. If you have been following us long enough in this channel, you know that we are very skeptical. We have been warning in our videos that we believe the market is not bullish, it's not a bull market. We might have a severe correction ahead. So we just want to have a look now what the chart formation is kind of suggesting. So let's have a look. I just want to remind you this isn't a financial advice, it's just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, how we avoid FOMO, which is one of the most common mistakes among traders. So if you like the way we trade, please, I would like to invite you to become a member of our free Facebook community. Buy, grow, sell strategy for share traders. And this community posts a lot of great quality content, including market updates, stock analysis, and obviously some of our results with our VIP members. Today we had the opportunity to lock part of our position MEGAPORT, a position that we have been holding for longer than I would like to, as a result of some headwinds. But we managed to take advantage of the fall. We knew the fundamentals of the company was still strong, and we're able to lock in about 26% for half, and we're gonna chase the target still. And hopefully, once the stock reaches the target, we move forwards to another stock then with that very much same fund that we have available. So let's talk about the S&P ASX200 correction. So despite the optimistic view of a lot of so-called analysts in the market, our strategy BGS20 indicators and even our KPIs continue to suggest that the potential correction is it's very likely. And I'm going to show you into the chart formation in the next few moments. Consequently, we remain very attached, we're sticking with our strategy more than actually everyone else will. And we're still holding some of BBO's positions since we opened last month, just as a countermeasure. The current chart shows a very sort of a very bearish warning potential in there, followed by a bearish intersection, which I'm also going to be showing you in a very few moments. Okay, so the sectors that are more, I still believe that sectors that could take a lot of advantage, which obviously are the growth stocks and tech sector, healthcare sector, and consumer staples sector, where the material and financial are the heavyweight on ASX200. We continue to see BHP, Rio, Fortescue falling even further, which is fine. It is still very much in line to our prediction, to what we have been anticipating here as part of the macroeconomic cycle. You need to understand, if you're going to invest on the stock market or trade on the stock market, understand that even though the market goes down, the whole index goes down, you need to understand what are the sectors that tends to benefit most with that particular contraction stage of the market, which is pretty much where we are now. And what are the stocks that could effectively take advantage of that going towards to the next stage of the market, which is going to be a recovery. But the recovery is not going to happen until, and then look, I don't like to be pessimistic here, but until we're probably going to have a big fall somewhere between now and the end of the year. And then that's when we're going to have a recovery. This is only my thoughts based on my knowledge, my experience of over 15 years on the stock market, understanding macroeconomics. It could potentially could not happen. The market could go nuts and go very ballistic, but I don't think that. But nevertheless, I'm always keep eyes on the chart and look at the chart formation now. As you can see, the ASX200, to which the ASX code is XJO, is showing what we call bullish intersection level 1 and bullish intersection level 2. The RSA as well doesn't look very promising, and for me this is a clear suggestion that the market is sort of moving sideways, and the fact that it moves sideways concerns me. This sort of top here back in February, and then we have a lower low. We could have a continuation of this lower low and see our market sooner than later trading at this below 7,000. That's what I'm talking about. So if obviously this correction continues, then a lot of this as well has been generated by US Treasury still not entering into agreement with the debt ceiling, so they keep procrastinating. I don't think that will be. I think that will be an agreement sooner or later, and they have to. But obviously, you know, as I do, that if the debt ceiling is increased, then obviously that will most likely generate further inflation over the long term. I'm not talking right now because we have interest rates being risen a lot of times, as you all know, but that will ultimately generate further inflation over the long term, which ultimately will lead to a potential recession. What I'm looking at here is that the ASX200 is trading still at higher, like formal levels, and that is obviously a warning sign that ideally when we want to be buying stocks that are leading the ASX200, like finance stocks and material stocks, when the whole market is sort of trading under the SMA 250, which is our long-term moving average, and therefore what we call technically discounted prices. That's when we are more comfortable of any entries and buying a lot of stocks. Okay, so look closely what's going to happen in the next few days. But keep in mind that still the market still can be very profitable if you are in the right sector, and that's exactly what we do here at BG Trading. We detect what are the sectors and we trade stocks in that particular sector. Hope that was valuable. Let us know what you think. If you agree, if you disagree, that's fine. Yeah, put the comments below, and I will be delighted to read all of them. I'll get back to you guys as soon as I can. Thank you very much, and I see you in the next video. Bye. The whole idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.